Good afternoon. Good afternoon. Sorry, I don't have chocolate to give. I heard that the guy from Nestle gave you chocolate, but I work in a bank, so I don't have that. Sorry about that. Money. Okay. So I'm going to tell you about what's happening in a finance, in a banking side, right, in terms of digital, and what we are doing as well at CIMB, and what are the new kind of the changes we need to do to be able to cope with a new digital economy. So why are we doing it? Okay. In fact, we realize that the world is changing. The world is changing very fast. You have new competitors coming up for bank. Competitors can be a telco, can be an e-commerce platform. We have new technology coming. Most people have a mobile phone now, smartphone. And do you know how many times a day a person looks at his smartphone? In average, 200 times. So it's quite significant. So we have, as a result of that, we have expectation of people is changing, right? People want to be able to do things anytime, anywhere. They want to get access to information as well. It's very important. Information is becoming more and more important. And with the new players coming up in a digital world, what we realize that people don't need bank anymore, but need financial product and services available digitally. So I see the expectation of people is changing. And what we realize is that what people expect nowadays, what are the jobs to be done? People want to save time. It's that when we go in every country in Asia is what we realize, and I think even in the world, right? People don't want anymore to spend time queuing in a branch. And sometime in the market we have here in Asia, they may take 1 hour or 2 hours to reach the branch. They don't want to spend time waiting when they deal with the call center, for example. So what does that mean? That means that when we build solution, digital solution, we need to address that. We need to make sure people are not going to spend too much time in a branch. Possibly, if possible, can they open an account digitally within having to move and fill I don't know how many forms? Can they spend less time by providing the right level of information in an app instead of calling to a call center? So all that needs to be addressed. So the second point coming loud and clear is people want to be recognized. So what does that mean to be recognized? That means they want to be called by their name, and they expect the organization to know them. And very often in bank, you know, when you have a client who have a saving account, the day he wants a mortgage, we may ask him again, okay, what is your name, where do you live, what is your income, what is your source of fund, when we have already all this information with us. So how do you do that? By using a lot of data and analytics tool. The third point is people want to be successful. You ask people what do you want. They want the bank or someone to help them for their retirement, plan for their education for kids, a lot of lifetime goals. And that very often we need to use artificial intelligence for that, to be able to bring the best offer and the best product for the client in view of his needs. Last but not least, people want peace of mind, security. This is really important for bank and particularly financial application. You know, if you take a Grab one day, and if it doesn't work, that's okay. You don't take Grab anymore. But when you deposit money with a digital bank, like a few $1,000s, for example, or ringgit, you really want to make sure you can get that money later on. So who is behind it, right, is very important for the client. So I said the expectation of people is changing. few years ago, maybe 2-3 years ago, not so long ago, the expectation of people was, when I go and deal with my bank online, I want to be able to do a few transactions, and I want to be able to access my statement. Nowadays, it's quite different. People are expecting someone, an organization, to bring everything together, to help them in a day-to-day life, when they book a flight ticket, for example, offer them insurance products, plan for a trip, take care of their health. So day-to-day life event. But they're also expecting someone to help them on their lifetime goals. Again, as I mentioned previously, planning for retirement, etc. So how do you achieve that? How can you bring all the ecosystem together to be able to add value to clients? It's something that banks are now trying to do. And what's happening is that there are some studies saying that 70% of any human activity end up into a financial transaction. So the question is that how can we engage the client earlier in a transaction life cycle? And usually you can do that by partnering with some ecosystem partner. So if you look at CIMB right now in Malaysia, partnering with Alipay through Touch and Go is going to bring more services to clients. When we talk about digitalization, that doesn't mean just adding lipstick to the bank, just adding an app. It's all the fulfillment behind, right? How we are going to be able to support the volume of transaction, because it's about dealing with many, many transactions. So it's really transforming the bank from front to back, making sure that from the time you get the client, he can engage with you seamlessly. So you can process a lot of transactions and answer his queries. We need to use as well a lot of analytics, big data. It's again to add value to the client, to be able to bring the best product and services to him. So we need to capture a lot of information internally that we have, digest it, and come up with the best solution for them. So you have a kind of simple kind of analytics tools when we do simple recommendation, but you can go to extremely complex recommendation. But what we realize that very often the simple recommendation are the best. So when you look at, again, the digital player, very often they tell you, okay, for example, it's raining today. When you take a Uber, it's raining today, we give you a 10% discount. That's contextual. Everybody feels like good about it. And sometimes we try to do some stuff which is a little bit more complex and taking more time, which is predictive analytics, where we really try to tell people, okay, this is what is your next action. For example, in a few minutes or a few hours, you're going to go to Starbucks. So why I'm talking about analytics is because there is a need in the financial industry for more and more people working in this area, data scientists, people we can deal with big data, and we can train the business about what they can get from analytics. So that's one of the key new jobs that are really coming up now. Here is a chart explaining what is the difference between a bank on the left and a new digital player. So on the left side, you have really the key assets and skill of bank that we really want to keep. This is what, as a bank, we need to make sure we keep always. And on the right side, this is what we are learning from the new digital player. And that's required to embed, to bring the right side into the left side. You really need new skills and new training. So if you look at the left side, trust is a key asset of bank. People prefer to keep their assets with a bank than with Facebook for the time being. That's what they say, right, for the time being. Security is very important. Banks are already focusing a lot on security. If you look at, sometimes you hear Google, Apple, they lose password and ID. And people talk about it for a week and they forget about it. If that's happened to a bank, it's a big, big issue because people are not expecting bank to lose data. So that's why we need to keep focusing on that because it's really what differentiates us. Expertise, financial expertise we have, but it can be replicated. But one of the key differences is really risk monitoring. In financial institutions, we are monitoring risk at every level of the transaction life cycle and so on. And the new digital players have not been tested in crisis environment. So the risk monitoring is not really tested. So that's a key differentiation. On the right side is really where we need kind of to bring all these skills to bank. And this way, from a HR point of view, is kind of important. Client centricity. We need to build products who are oriented to client. So we need a CX expert, customer experience expert, UX expert. Analytics is very important. We are learning as well that the new digital players are using analytics a lot. Mindset change, okay, coming from a inside-out view to an outside-in kind of view, looking at what's happening outside, very important. The speed of development, so we need to organize ourselves differently. You know that the digital players, they may launch a new product every month, and usually in bank it takes us 9 months. So how we can bring things faster, and usually by organizing people from technology who have expertise on agile methodology, development. So that means they work in cells of development where you have the operation people, the risk people, the designer, the programmer, all sitting together and building a product very fast. So that's also a kind of shift happening. Ecosystem partnership is also very key to be able to reach more clients. And you can see right now in the region, everybody is trying to do partnership. You see Alipay partnering with Paytm in India. You see Grab partnering with a payment gateway. You see e-commerce sites acquiring other e-commerce sites. And all of them, everybody trying to get a big client base. Because what they really want is access to data about people. Telco as well. In fact, CIMB, my bank, is doing something with a telco company in Thailand, where we are creating a wallet for the telco client. So that will give us access to clients through the wallet, but will give us also the possibility to migrate some of these clients of the wallet, which is limited in amount and so on, to have a full bank account with us. Regulatory aspect as well is very important to understand. And that's why, you know, we need more and more compliance people and legal people. So you can see that if you understand well the regulation, it can become a competitive advantage, in fact. If you look at, for example, another example from Beidou in China, if you look at China regulation, if you open a CASA account, a saving account, a checking account, you need to get someone in a branch, sign 30 documents or something like that, 30 pages at least of document, and then you can open an account. So the Beidou, Ant, and Tencent, they said, okay, no, we are not going to do that. We are going to allow people to open investment account, because the regulations say you can have an investment account provided the funds are coming from a registered bank that in fact has done the KYC. So they create that, and in a few weeks they sold billions of dollars on money market funds, becoming the biggest wealth manager in the world, right? So that's a very smart way of looking at the regulation, and this is what we need to do by engaging from day one when we build a new product, the compliance people. So what we believe is that if you look at what are the key assets of bank on the left and the key assets of digital players that you are learning, it's easier to bring the right into the left side of the bank than bringing the left into the right, because the left is really things you learn, you need many years to learn. The right side can be done. You know, banks start hiring people who are doing CX, they do training for the existing staff to think about client, doing prototype, doing hackathon, doing design. All this can be acquired, and I think it's pretty easier than the other way around. So why is it, how can we be successful by bringing the two sides together, right? The right and the left side. There are a few reasons why it can be successful. Some external reason and some internal reason to the organization. External reason is that people are expecting that. People in the street are expecting someone to bring everything together and add value. Second aspect is people like us from a traditional banking and finance, we can start using the same tool as a digital player, like prototyping again, doing a survey, managing with data, having a fact-based kind of approach, and developing in an agile way. That can be done. And we are learning, following exactly the same way. Third aspect is regulation is opening up. In every market, we see the regulator supporting a more digital kind of approach. Why? Because in many countries, like for example, if you take Vietnam, Thailand, Indonesia, Cambodia, and so on, you have only 20 or 25% of the population having a banking account. And obviously, we need financial inclusion. And third, there are huge countries. If you look at Indonesia with 16,000 islands or something, the only way to go is really digital if you want to do it pretty fast. So with the objective of giving access to people, regulators start supporting a lot in this country, digital onboarding, facilitating access to accounts, reducing the limit, and allowing some kind of eKYC check to be done. There are also some internal reason when in your organization how we can make it happen is really by not creating a digital team that is isolated from the rest of the bank. It's very important that when you build something digital, it has to be linked to the business, because you need to meet a business need. Otherwise, you end up creating something that is not needed by anybody. So you need to work very closely with the business. You need to leverage your HR team, human resource team, that should look at new kind of people to be hired, training as well, and make sure supporting the digital organization or team. Because what we notice now in banks, we start having more and more people not coming from banks, like UX designer or data scientist. And they don't fit in the organization right now. If you compare with an Apple, for example, or Apple or Google, the chief designer is a direct report to the CEO because it's one of the key functions. So we hire people coming, doing design, CX, data scientists, and usually there are also younger than the people we have. You may have a guy or 26 years old who is a master doing UX design, and you will retain him only if you are able to give him the right level in the organization. So sometimes they may become director very young. And that all this kind of change we need to think about progressively. Training as well of the existing force is absolutely important because it's, all of us are born with a digital, right, here, including myself. Before moving to digital, I was like 18 years in a bank. So I could transform myself, learn, and I think everybody can do it nowadays, but it's just a question of appetite to change. The next aspect is when we create digital, we should look at no legacy constraints, meaning we should try to be more independent from a traditional kind of infrastructure you have. Like very often we said, okay, we have a legacy issue because our platform is old, so we cannot do much. So we need to create really the kind of structure that allow us to be less dependent on this infrastructure by, it's a bit technical, by creating an API layer, application protocol interface that allow you to build new things on top of your old platform. And also, when we start digital, choosing a business where we may not be top performer. Because if you go to a business where you have a very strong, solid base, you have cannibalization issue and you have a lot of resistance internally happening. So usually you choose something where you're not be on top. And then create from one kind of digital experiment, keep replicating and convert the entire organization. Next is what are the key priorities that I see that everybody needs to have in mind in these next few years? And it's really around A, B, C, D, E. So it's easy to remember. I think after to try to find out what is the A, B, C, D, it comes easily. So A is about having looking at artificial intelligence or augmented intelligence, because right now it's more about helping the human being by being able to find solutions than replacing the human being. And this is the way we see it at CIMB, giving tools to make sure to people to make sure they are able to identify the right kind of, again, offer or product to client. And the API having an API kind of interface, meaning API is a tool to simplify to build applications. And it's like, for example, if you want to build an app on the Apple Store, you take an API, and you are going to build something around it. In future, banks can have their own app store, application store, where if someone wants to build a FX portal or transaction processing kind of a solution, they will be able to go in a tool and build them themselves. So that will allow you, for example, if you have an e-commerce site who wants to do FX transaction, foreign exchange transaction, they can go and build from your toolkit, and then you will process all the transaction. So it's a win-win for both, because the e-commerce doesn't need to build foreign exchange capabilities, and the bank has access to a network of many clients. Second aspect is blockchain. Blockchain can be, right now is early stage, but it can be really a revolution in terms of, for any kind of transaction services product, when you require immediate exchange between some cash and the securities, for example, true delivery versus payment, can be facilitated through blockchain. ID, digital ID as well, can be facilitated through blockchain. In future, you know, when we go to website and so on, we always have an ID and a password. And it's quite cumbersome because you really need to remember everything all the time. In future, you will have a blockchain ID that you will use everywhere. And I will link to you, and it will be easier. You don't need to remember so many things. Cybersecurity very important because when we go digital, what we realize is that you have velocity, it goes very fast, you can open thousands of accounts very quickly, and disintermediation, you don't meet the people necessarily all the time. So you need to compensate by having the right platform and system to monitor what's happening in a new digital space. Client journey, we need to work on client journey, meaning instead of, right now traditionally in finance, we think about product. So we say, okay, my product is credit card, my product is a mortgage. In future, what we start thinking is that people don't wake up a morning and ask for a mortgage and think they're going to get a mortgage. They think, oh, I'm going to look for a house first. So where is the journey starting? Is where you need to really think and get the people. So that's, again, a new kind of people you need in bank. Data first. How do we convert our organization from a non-data organization to a data-first organization? A data-first organization is an organization that is born on data. Like they are born in the 90s or 2000, like Google. Everything is around data. The organization, their structure, their KPI, people start meeting, talking about data, fact-based, and how we can convert organization more about be able to use the data, because we hear too often people say banks are not able to use, or financial institutions are not able to use data. Digital, obviously. Last, ecosystem. Okay, how we reach a bigger ecosystem, because it's all about having mass, big number of prospect and client that you can reach. Employee is very important, because I mentioned about the client journey, but what we need to do is also the employee journey. Is how can we do a performance appraisal using a mobile phone? How can an employee book his trip, corporate trip with a mobile? How can he claim his healthcare kind of benefit? How does he access the office in the morning, right, with his phone? All these kind of things, or he get access to training. And there are good apps as well these days. I think SmartUp, I think you got maybe a presentation this morning, where you can get everything right, and much more interactive and useful. So thinking about client journey, employee journey is very important too. And experiment, keep doing kind of experiment is the last E. So A, B, C, D, E are the kind of key priorities we want to look at. So to finish, it's really when we move digital, you have to be ready. I put it in my terms that to open your heart, that means to have an open architecture, to be able to reach out to people, not to be kind of close, and be able to do partnership is all about that. Next is to rock and roll, because you had the measure between a digital world and analog world. And you really need to be able to bring the two together, and it's not easy. In the HR space, you will have people cohabiting in a bank, people coming from a traditional bank, and people coming from digital players, and it's not easy. So for example, if you hire people coming from Silicon Valley or from Cyberjaya here, they will tell you, oh, that's good, I want to work for a bank who is going to do something different. And you take your people from the bank and you bring them in a digital kind of framework. They say, oh, that's exactly what I want. I want to work, have more freedom, work a little bit like a startup. But 3 months later, people coming from Cyberjaya are going to say, oh, but it's too rigid, too many control here. People coming from a traditional bank or financial organization are going to tell you, not enough structure, I'm not sure about my KPI, etc. So we really need to balance the two together, and it takes a few months. But after a while, you will get everybody aligned. To play in a different league, because it's going extremely fast, you're talking about millions of clients very quickly. Potentially, you need to be able to onboard 5 million clients in a few months. So it's really a kind of different level from what we are used to. Constantly push boundaries because you will always have resistance at every level. When you go digital, you will have a technology team saying, oh, I can do it cheaper, faster than a FinTech. You will have the compliance saying, okay, we cannot onboard, or procurement, we cannot onboard this company because it doesn't have 7 years of operating profit. So you really need to change all that. And you will have some failure in a way, right? But when you go digital, you can really make sure these failures are not too big because you do small experiment and you keep build on it. So if your experiment is failing, that's not too bad. You can move to the next level, or you can replace and do something different. So that's what I wanted to share with you. I think my time is off you. Thank you very much.
Thank you very much, Mr. Olivier Crespin.
Yeah. Question?
Would you like any questions from the floor, please? Yes, Raymond.
Question, yeah. Yeah, I can hear you, but I don't.
Olivier, thank you very much. But the rest of them can't. All right. Okay, Olivier, thank you very much. Very forward-thinking, very visionary. So, merci beaucoup. The question is, in my mind, will we need national currencies at all? With the fluidity of organizations, cryptocurrencies, will there be any future for a national currency in any country?
I think there is still a need for national currency because it's how the country can still maintain some kind of level of independence as well and can still play with it, to reach some competitivity. You see already when you try to do one currency across Europe, that's create a lot of unbalancing. But it's true that a new cryptocurrency in some market, in fact, in few markets, people believe more in Bitcoin than the local currency itself. And so that's a shift. We'll have people using this kind of currency, but it will be, I think the government and the central bank will make sure that their currency is still alive for a while. Yeah. Any other question? Cashless. Okay, that's a very good question. It's a challenge to be cashless. Okay, I try everywhere I travel. I try not to bring any cash. It's getting easier and easier. I think you have some different views. Some people say cash is good because it's like a tradition. It's very nice. Also, people like me, I said, me is like a friction when I need to pay. Looking for, do you have my card is going to work, or this or that? Do you have coins in my pocket? So every market is pushing for cashless. Okay, there are a few reasons. One is because it's more efficient, because when you have bills, notes, etc., economy of picking up the cash, reconciling it, etc., and the time, you have some time lag. In creating. You have tax reason as well, because if everything is digital, no exchange is non-cash. So I think we are going, and you see Singapore saying they want to be digital by 2019, I think in 2 years' time. I know Malaysia is looking into it. And we'll get more and more, and it's going fast. I was in India. In my past life, I did a digital bank in India. And at the same time we launched it, the government withdrew a lot of notes. PayTM came up as well in a country and become very big. And now you can go to any shop, literally, and you can pay with a QR code, okay? And even you want to buy a tea in a hawker center, you can pay. So the speed, the way it came up was extremely fast. In China, 5-6 years ago, when you were taking a taxi, if you didn't have cash, the taxi driver was very upset. Now the taxi driver are upset if you don't pay with your phone, because they have an incentive. And I was talking to the CEO of Ant Finance, which is Alipay, and he was telling me that when they launch in some cities in China, to launch the digital for a week, city of 200,000 people, they make all transport free if you pay with your mobile phone. And it's also change the behavior of people and get it done. And when you're not using anymore to have cash, I think is kind of a good feeling. Yeah.
Sir. Yes. I'm Lloyd from Great Eastern, life insurance company. I'd like to, as you talk about digital solution, I'd like to hear your thoughts on cloud computing. I know you're from DBS Singapore, then now in Malaysia, probably some in
Okay,
so what's the way for computing?
So I think that for me it's not a regulatory issue, because I think from a bank we are aligned with regulator. We don't want any of our data to be exposed outside, because we know it's our core kind of assets. So what can we do with cloud? Obviously we want as well cloud, because it allows us to be competitive against the new digital player, because they have so much capacity to process transactions that we don't have, and they make it much cheaper because the cloud is cheaper. So it's really about understanding which part of your data you are fully comfortable to expose to the public cloud, which part you can have in a private cloud, and which part you want to keep in traditional kind of server like before. And I think that there is a lot of data that banks have. Maybe 90% of the data are not linked to any client. Maybe just kind of a transaction, but that cannot be linked to any particular. So you need to isolate your client demographic that you really need to keep in-house, I think, for the time being. And on the cloud, you can get quite a lot of information already. So it's happening progressively. But you know, the issue is that we don't want to have, for the time being, we are not even if the regulator will allow us, right? We are not fully comfortable 100% to expose our client name onto the public cloud too quickly, because we can see Google, again, Apple, and so on, losing data regularly, right? And so there is that concern, and we are working on that.
Do you see Malaysia open up more to cloud computing compared to Singapore and India?
Yes, they will, but at the end of the day, it will be the responsibility of every individual bank. So they will do like Singapore, I guess. Singapore say, well, fine, but the data is yours, make sure it's safe, right? So they will, because the world is going on the cloud. It's much cheaper, faster. It gives a lot of kind of power, capability of processing. It's helped to bring all the information together for the client. So it will come up, right? But we need to make sure we don't expose individual client name or data.
Yeah, thanks.
Yeah.
Okay.
Okay.
Thank you for taking the questions, Mr. Crespin. Round of applause, please, ladies and gentlemen.